Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading for law. It is Tuesday, June. Is it? Yeah, Tuesday, June 16th. I'm retired. First and foremost, all glory to the Most High God. Let's bow our heads for a quick prayer. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to learn, to grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, we ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. 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 Can the church say amen? Amen. Let's begin. Before we jump into the charts, I just want to say this. There was a time I used to sit down on the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realizations. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And I am the Trader Capital. Our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, as the fund manager. It's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are 2 types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At I'm the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. Weekly target going to this week is 3%. All right, mental check-in. Aside from my tiredness, I'm super duper tired. Last night, freaking fire alarm went off, so bloody hell, it just interrupted my sleep, and I had to try to go back to sleep, and it was hard to sleep. And then when I fell into deep sleep, it was time to wake up. So I'm super tired, but all in all, I'm well, all is good. Excited to see what price action has in store for us today. Excited to continue to grow. All right, get 1% better. All right, if I don't speak too much, or if I'm like slurring my words, that's just because my brain is still trying to wake up. Okay. I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News is Tuesday, June 16th. We had high impact news come out at 8:30, and medium impact news come out at 8:30. All right, it's the day before FOMC, two-stage FOMC. It's the day before two-stage FOMC. Always get some tricky price action, at least in the PM session. So I'm going into today cautious and wary, right? Just because we have two-stage FOMC tomorrow. But anyway, we have news today, making it an optimal day to take a trade. Risk going into today, we're at 0.25 of account size, and we have a max of 0.75 per account per day. Weekly program, I don't even know if any side of Monday's range has been taken yet. Let's go ahead and see if we establish a weekly program, and we'll progress with our trading processes. Different day, same shit, right? Different day, same shit. Nothing changes here, right? Different day, different market conditions, but what we do, what we're looking for, remains the same. Okay, we're taking Monday's high, so we're establishing a weekly. So for the week, right? For my week step condition, I'll go from Monday's range from 12 a.m. to 12 a.m. All right, lowest low. Oh my goodness, this is the wrong thing. Same thing as we do for any other condition. Lowest low. Let's go here to highest high, 12 a.m. Let's get Monday's range. As you can see, we're taking Monday's high. Okay, so we're establishing a weekly condition as a buy program. Not that it's necessary for our day trading, but it's always good to be aware of what the week is saying. So you always want to be in line with the higher time frame, right? So when you take counter trend trades, you know exactly what you're going against the weekly, right? But anyway, we're taking Monday's range high. Okay, so we establish a weekly condition as a buy program until we've come and take Monday's range low. All right, I'm maintaining a buy program. If we come and take Monday's low, obviously then our bias will be flipping from buys to sell. But right now, we're in a buy program in the higher time frame. Let me see if I need to adjust any ranges here on the higher time frame. Oh, just the daily then. Previous date. Let's get previous date. Also, if you're using previous day to determine your step 1 condition, as you can see, we've taken previous day's high already. Okay, so if you're using previous day, you'd be going into this morning in a buy program, okay, which is in line with our weekly program, okay, because obviously that's Monday's high. Yep, and that's all that needs to be done here. You have buy side up here. We have 20-day high as a draw on liquidity. Okay, I'm seeing how price behaves in this inefficiency on the daily time frame here. It's a bull run. Yes, you should be taking notes on what I'm saying, especially if it's regarding what I told you to pay attention to. Step 1, condition. Whenever you hear the word condition, your ears should be alert, and you should be writing it down. Yeah, anyway. We progress onto 3-step trading process. Step 1. What is step 1, Nee? What is it? What is step 1? Not conditioning, condition, yes. Step 1, condition, all right? Determine a bias, all right? Directional bias for the day, right? Or if you're day trading for the day, if you're going on a swing trade, you want to do the week, all right? So for us here, all right, for the day, we go from 12 a.m. to current price action, okay? Wrong thing again. Lowest low is right here. To highest high. This will give us our dealing range. And we'll wait for one side of that to get taken to establish a condition, all right? If buy side is taken, we're in a buy program. If sell side is taken, we're in a sell program. Above dealing range, we have, is this still in play? Okay, this buy side is still in play, cool. And then above that, we got 20-day high, cool. Below now, woo! If Tide was a person, it would be me right now. Below, we have Asia session sell side as potential draws on liquidity here. Below that, we got AM session sell side from yesterday. Which is also dealing range, open range, dealing range sell side. So let's make that apparent. You know what I mean. We got 30 seconds now. Come on now. Let me get that. Can I get that? Boom, boom, boom. Make it solid though. If we need anything lower, we'll go lower, but for now, I'm content with what I have on the chart. All right, we're kicking off. Medium size open range gap, okay? I'm not anticipating way too much, obviously because it's before FOMC, but anyway, we're taking dealing range sell side. Our condition has been established as a sell program, all right, because we took the low of the range from 12 a.m. to current price action, all right? So we're in a sell program. Nee, what program are we in? Yeah. I need a new mic. I know. I got a ghetto mic. It's so we're in a sell program for the day, all right, which is going against our weekly program, all right, which is a buy program. So be aware. Just be aware of that. I'll be watching a continuation sell with this market structure shift. Nothing that I would engage in yet. I'm waiting until after 303. Let's give it some time. Yeah. We have mic problems here, you know. I need to invest in a better one. I want one of them ones that attach up here. I got a ghetto mic. I got a ghetto setup right now. My brother tells me all the time that he can't hear me. So you're not alone in that. You're not alone. It's me. It's on my side. It's Trading Edge Tuesday. All right, we have 3. And make sure, yesterday I took a trade on the wrong account and I had to close it prematurely. I was highly upset with myself. Highly upset. I'm watching this continuation sell here. After 303. Come down up into an inefficiency. Structure shift here. If it gives me this, I'll be interested. It will be a retracement setup. Which will be going against the daily, but will be in line with the weekly. Only if he gives it. Yep, less than 100. All right, it's looking like it's gonna give it. Let's see. Finger on the trigger, waiting for that market structure shift. There it is. Pull in the trigger. Let's see if I get tagged in here. Will be. Damn, it's already going, isn't it? They said, hell no. Don't need this no more. We took Asia session sell side here. Let's see if I get an entry here. If I don't, it's cool. It is what it is. This is also a potential entry up here. If it doesn't come to my target, my entry, potential entry, because this one candle causes a market structure shift here and it causes a market structure shift here. So right now it doesn't need to come to my entry. Let me see what it will still be if I enter up here. Probably gonna be like one contract or something. Oh, it's still two. Okay, still two, so I can adjust. Because it still gives me two contracts. Okay, and I'll be using this to frame risk and exit. Been tagged in that one. 666 right there. Still gave me two contracts from up here. Okay, so met the risk criteria. For the risk to reward, folks, just a little bit under 121. Get taken out here will confirm a continuation sell. Depending on risk, would have come to our initial entry there. One contract Larry. So this is a retracement setup. We have two types of trades: retracement and continuation. So retracement setup, all right, going against the daily condition, which has been established as a sell program, but is in line with the weekly program, okay, which is a buy program. So that's how they kind of work together. The different ranges work together from the lower time frame to the higher time frame to tell the story of price action. Let me see the low, these two lows. 443, 443. Okay, they're the same low. Which part, please? Oh, okay, so this current trade that I'm in is a retracement setup, all right, because obviously for the day we've established our program as a sell program, so I want to be a seller. However, this is a buy setup, so it's a retracement setup for the daily condition, but is in line with the weekly condition, which is a buy program. Does that make sense? So this trade really is going against our daily condition, but is in line with the weekly condition. Do you really get it, or? We're in a sell program for the day, but I'm buying right now, so it's a counter trend trade. All right, it doesn't need to make sense right now. Just write it down. Hasn't given us bread and butter yet. Above price. We've got previous day's high in the middle of the range. Not in the middle, above in premium of the range. Oh, bread and butter. Thank you very much. Traded Edge Tuesday. Bear with me. I'm tired.
See you later, man.
Ciao. Have a good day.
You too. Tired, mate.
I know. Drink some coffee today. You have permission.
Yo. Some wild stuff.
You saw the email apologizing?
Like,
Fuck
what does
them
that even
niggas.
say?
Them niggas.
That chat GPT ass special. I need my sleep back. I don't even know. I'm sorry. I need some money and I need my sleep back.
You see they're doing a donut thing?
Yo, don't piss me off.
You do not know how much we appreciate you. That's what the thing said, I think.
And I bet it's in the afternoon. Like, who wanna eat donuts in the afternoon?
You're trying to fatten us up.
What? See you later, love you.
Ciao, love you too. Once you enter the trade, all right, it's out of your hands. There's nothing you can do. It's in the market, the model, and the trade management's hands. Nothing for me to do here. But just let the trade do its thing, right? Either way, I accepted the outcome, all right, because I know my risk, all right? I know my risk, and I accept it. Oh, open range gap. Sorry, I completely escaped my mind. It's above price, so we gap down, so we have a discount gap down. Okay, we filled consequent encouragement already. It's failing to completely fill it in there. Turn around anytime, and I need you now, tonight. These retracements are wild, dog. Last line in the sand for us here, because it's also a 1 minute time frame entry. So we'll manage it on a 1 minute because there's a higher time frame than the 15 seconds. Would be body closure in the main threshold of this order block here. Today we're talking trading edge. How do you build confidence in your trading edge, right? I'm the Trader Capital. Confidence in our trading edge comes from three things. First, it comes from understanding how the market actually operates, right? How these candlesticks move, why they do the things that they move. And it's important that you know the who behind money that we talked about on Monday, all right, yesterday actually, the who behind money, because it makes these candlesticks open up to you, right? You understand the storyline behind these candlesticks more once you know the who behind money. You get a better understanding of how these markets operate, okay? Next is having one trading model. One model with IPTA signatures. We'll talk about IPTA and what it is, all right? With IPTA signatures that you trust and execute on a consistent basis, okay? I have two models, right, that I trade, and that's pretty much it, right? Is it based on the two types of trades I have, right? Retracement and continuation. They are both a model in itself, okay? And thirdly, having the plan and process, because without a plan and process, you're just reacting to price and you're winging it, all right? Successful trading is boring. You're doing the same thing over and over and over and over again, okay? You're not switching things up, all right? It's boring. It's like having a job and going to your job and knowing exactly what you're doing. You're doing the same thing here, okay? There's no excitement. Obviously, I get excited seeing the price action and seeing that what I'm actually looking for is actually working out sometimes, right? But it's not like an excitement in terms of what I'm doing and what I'm looking for, okay? I just try to make it a bit lively sometimes, because sometimes watching these candlesticks can be boring, all right? Nothing really happens. Majority of the time, 90% of the time, we're waiting for something to happen, right? We're waiting for the market to tip his hand to us. Let me grab this real quick, 1 second. I'm already too late in it, yeah. All good. Thank you very much. Thank you very much. We appreciate see the outcome of that trade right there. 239. This account is finally out of drawdown. What? Stop playing with me. I was in drawdown for like since the account started. 20 days. Over 20 days I've been in drawdown. And I was down to what? 1700. Came back. Now we up. Now we up. All right, let's see what else this trade is going to offer us. Let's see what else this trade is going to offer us. We would have got -1, all right? Let's see what else is in line for this trade. We have previous daily high above price. Knee, it hit my target, all right? That was my target getting hit right there. A retracement setup right here, okay? This was a retracement setup. Bear with me, bear with me, bear with me, bear with me 1 second. Nee, what's your favorite Afrobeat song right now? Give me your favorite Afrobeat song right now. Is that the name of the song or you're thinking? Do you listen to Afrobeats, my guy? If I told you to play me one song right now, what song would you play? What? What's wrong with you? What kind of whitewashed African are you, mate? Yeah. I'm gonna need you to start listening to some Afrobeats, alright? Get some culture in you, mate. Yeah, right. Black as my ass. You're not as black as me and your brother, though. You are my sweet honey. You are my sweet honey. Abana me si tre de de de. The one. Gas and I'm in tune, yeah. Can't decide by. Okay, let me see what that was about. Now that we got a song, let's pick this song. What's it called? Hold on. Can't Decide by Rumsey. Is this an Afrobeat guy? Okay. Alright, but anyway, we're gonna play it. All right. But we're gonna use it. We're gonna use it. Call it a day. All right. I put it with my video. I put it with my video. But you need to get into some Afrobeats, man. All right, we're talking trading edge today. We're talking trading edge. Specifically today, we're gonna get into our three-step trading process for Mr. Nikwatikkorte. Today, we're gonna mainly focus on three-step trading process. Okay, I'm gonna whip through understanding the trading, the market and the trading model, and we'll spend a lot more time on a planning process. Okay. So make sure you're paying attention here, all right? Make sure you're paying attention here. We're still watching to see what else this trade will offer us, and we'll wait until post 10 o'clock opening range, all right, to get our opening range, daily range. For if we're going to take another trade, it'll be after 10 o'clock right now. But right now, nothing for us to do. But watch this trade right here. Okay, so when it comes to understanding the market and how it operates, right? Like I said, first you need to understand the who behind money, okay? Who makes it, who controls it. Okay, we talked about this yesterday. I'm not sure if you caught any of that, Lee, but we talked about the who behind money. The people that make the money and control the money. Bear with me 1 second. Where is my thing here? Right here. You are my sweet honey. Bani me see true pepe. Bani me see real. Kasan namin tune. First, you have to know the who behind money, all right? In order to understand how these candlesticks move and why they move the thing, why they do the things that they do, right? The who behind money is central banks, right? The thing that we know to be money, right? The thing that we all work our butt off for to get, right? Money, to look after ourselves, to enjoy life, right? Is made and created by central banks, right? It's their commodities, their asset, they own it and they control it, okay? It's important for you to know that it's their asset and they control it, okay? They control every aspect of it. And when you translate that to the markets, right, it's being controlled. They're controlling it in the open markets, right? Buying and selling government bonds. So they're in here in these financial markets, buying and selling government bonds. When they buy government bonds, they're injecting money into the economy. And when they sell government bonds, they're reducing money. They're tightening the money circulation, all right, in the economy, okay? So that's how they're controlling the money, okay? Control is the most important thing here. It's the most important word, control. That's how they're controlling the money, okay? They control it, okay? Right, so when you come into the financial markets, right, into trading, right, there seems to be a disconnect between the thought process about how people perceive the markets and how it operates and the reality of the market, okay? To understand the charts and the candlesticks, first you have to understand the who behind money, okay, and the market efficiency paradigm. This was a game changer for me when I understood it, all right, the market efficiency paradigm, okay? Here is a zero-sum game. And what zero-sum game means is that for someone to lose, all right, somebody has to be winning. For someone to win, somebody has to be losing, okay? That's what zero-sum game means. All right, Nee? Zero-sum. Somebody has to lose, all right, for somebody has to win, okay? So for me winning this trade here, somebody was on the other side losing, right? Somebody had to lose for me to win. Same thing on the other side. When I lose, somebody is winning, all right? It's a zero-sum game, okay? As traders, as investors, as speculators, as fund managers, okay? When we come into this market, we're made to believe that it's our buying and selling pressure that control price, all right? That is the sheer force of our participation in these markets is what causes these candlesticks to move up and down, right? This is not true. This is not true. We don't do nothing. We're like small fishes in this big ocean. We're small fishes, all right? We have no idea of the small group of people here, the liquidity providers in the chart here, the small group of people, smart money, right? We have no idea that they even exist, but they are the liquidity provider. You and me and everybody else, right? We're in a huge group of circle here where we think we're the driving force behind the market. We're in speculative, uninformed money, okay? To get to the side, the goal here is to get to the side of the smart money, is to lead and leave the realm of speculative, uninformed money who don't know that there's a smart money behind the market. It's 10 o'clock. Let me get my opening range. Remember, opening range, right, for you will be 2:15 to 3 o'clock, all right? It gives us our session condition. That will be your session condition for the session, all right? Because there's different sessions, right? We have New York AM session, New York lunch session, New York PM session. We also have London session, and we have Asia session. There's 5 sessions. Well, we also have overnight, but that don't count. 5 sessions, 5 main sessions. Mate. Alright, we got our dealing range established here. There are 5 main sessions, okay, Nee? 5 main sessions. We got Asia session, we got London session, we got New York AM session, New York lunch, and New York PM session. All right, 5 sessions that you need to concern yourself with. And each session, obviously, you can determine a condition for each session, okay? For the day, we use 12 a.m. to current price action, and for the sessions is opening ranges, okay? For AM session right now, New York AM session, it's 2:15 to 3 o'clock in your time. In my time is 9:15 to 10. Let's switch accounts here. Oh, I didn't even get a snapshot, did I? Mother sick. Bear with me. You are my sweet honey. We still would be in this trade, by the way, okay? If we had more contract, our stop would be adjusted to here and we still would be in this trade. So let's see how it plays out. But give me 1 second. Let me get my snapshot. Okay, hold on. Send your questions in the chat because we can't be going back and forth here. I'm missing one. I have London, New York lunch, New York AM, Asia, and New York PM session. So we have Asia session, London, New York AM, New York lunch, and New York PM. You got it? All right, good. I'll give you the times separately in your time, okay? Because I only know it in my time. When I do the configurations, I'll give you the times for you for each session, okay? Maybe after we're done here, I'll send you that. Or you can just look it up. Use Google, my guy. Like you try to use Google to do your homework. You're funny, mate. You're a funny guy. First presented. Market structure shift back above. Let's watch it though. Anyway, to get on the side of the smart money, the people behind these markets, these candlesticks, the people that control these markets, all right, the liquidity provider, smart, there has to be a shift in your thinking, okay? Right? You have to understand that the markets are only efficient for smart money, okay? The central banks, right? They drive price. This is their casino, okay? They own these places. They control everything that happens in these markets, okay? These candlesticks that you see printed in front of you, they're controlled to the smallest degree, okay? And that is a great thing. That's great news for us, okay? All right, the markets are controlled to the smallest degree. All right, it's AI. All right, it's AI, a computer program that delivers price. Okay, this is, like I said, this is wonderful news for you and I, because this means that it can be identified and it can be tracked because it's following code. Okay, when you're able to do this, right, when you're able to track and identify IPTA, all right, that's when you're able to leave the realm of speculative, uninformed money, okay, and join the side of the smart money, the people that know exactly why these candlesticks are doing the things that they're doing, okay? This is a casino. This is their casino. The central banks, they have their edge, right? Because they control the game, right? They control the game. That is their edge. They set the price, all right, of these markets. They set the price, okay? Just like if you own the shoe store, right? You get to set the price of the individual shoes that you're selling, right? Nobody sets it for you. You control that, right? It's your asset. It's your commodity. Same thing here, okay? The most important thing here for you to understand, it's that the markets, it's controlled, and it's a good thing that it's controlled, okay? That means we can track it and we can identify exactly what it's doing, all right? Okay? Understand? Controlled by central banks. Central banks. So central banks are institutions that, you know, control the economy for each country. So for England, their central bank is Bank of England, all right? For the US, their central bank is US Federal Reserve, and for Europe is the European Bank, right? It's controlled by central banks. Every country has a central bank. They're the people behind money, okay? They make money and they control money. Yeah? They control it in the open market in here, in the financial markets, buying and selling government bonds. Okay, so when they buy government bonds, they're putting money in circulation into the economy. And when they sell government bonds, they're tightening money supply in the economy. Got that, mate? Like I said, most important thing here, if you don't understand anything else, is to understand that these candlesticks are being controlled, all right, by an AI program. Yeah? AI has been a thing before AI became a thing. I said I'm gonna do this part quick so we can get to the 3-step process. So I need to hurry it up. Anyway, the algorithm, right, the AI that controls price from the central bank level, right, from the central bank level, the highest high, the small smart money, right, is called IPDA, right, IPDA, IPDA, right, IPDA, all right, interbank price delivery algorithm, okay, and IPDA only moves for 2 reasons. She moves for 2 reasons. She, he, it moves for 2 reasons, all right. First is to seek liquidity above and below price, and second, to reprice into any inefficiencies above and below price. If it's not doing any of this, it's consolidating, okay? It's seeking liquidity above and below price, buy side liquidity, and it's seeking sell side liquidity below price, all right? If it's not doing this, it's consolidating, or it's repricing it into any inefficiencies in price, like the imbalance that you see on your screen here, okay? So IPTA only moves for 2 reasons. She moves for 2 reasons. Seek liquidity, all right, and reprice to any inefficiencies, right? So when we talk about having a model that has IPTA signatures, right, that involves liquidity and inefficiencies, okay? And for my retracement setup, is based on liquidity. Well, everything I do is based on liquidity, right? But in terms of my entry, we'll get into that in a second. Because everything is based on liquidity, for me personally. That's what I frame my setups on, liquidity, because it's easier for me to see. It's easier to see liquidity in the chart than to pick which inefficiency is the correct inefficiency, okay? So this is what IPTA is doing, right? It's moving to take stops, all right, above and below price, and it's moving to fill inefficiencies above and below price, all right? That is it. That is it. If it's not doing that, it's consolidating, okay? So when it comes to having one trader model, one trader model that has IPTA signatures, right? As technical traders, we only need one pattern, one model, all right, to trade on, right? It's important for you to know that every model loses, right? You have to accept it. The goal is to find your unique model and grow with it, right? Remember, losses are the only thing promised to us. We'll talk about more about this tomorrow when we talk about risk management. All right, so every model is going to take a loss, right? Despite what you're doing, even having IPTA signatures, you're still going to take a loss. I still take losses here, okay? That's the only thing promised to us, right? So IPTA's doing two things, right? So you pick a model, right? Wherever you gravitate towards, whether it's inefficiencies or liquidity. For me personally, it's liquidities because it's easy for me to see that in the charts, all right? We have session liquidities, we have daily highs and lows, weekly highs and lows, monthly highs and lows, right? Those are very much time-based liquidities, and it's easy to see them in the charts, all right? So yeah, one model, right? You pick one of these, which one you gravitate towards. Like I said, for us, it's liquidity, all right? Anyway, I'm rushing this so I can get into the 3-step trading process for LIQUIDITY. That's a strong name you got there, mate. LIQUIDITY. Anyway, when it comes to a plan and a process, all right, remember 3 things to build confidence in your trading edge. We talked about understanding how the markets operate, okay? It starts with understanding the who behind money and the market efficiency paradigm, okay? Smart money, okay? You have fans, yeah? Of course you do. Of course you do. You got fans. All right, mate. It comes to understanding how the markets operate and having one trading model, all right, with IPTA signatures. We talked about IPTA and what she does, around the 2 signatures that you need to have in your model, okay? And now it's a plan and process, because without a plan and process, you're simply just winging it and you're letting fear and greed take over, okay? When it comes to having a trading plan, you need a plan for these 3 things. You need a plan for these 3 things. You need a plan for your account, okay? You need a plan for your risk management, and you need a trade management plan, okay? We'll get into each one. Oh my God, wrong thing here. Nothing for us to do here, all right? We'll be waiting until 10:30, where we have time and price, right? Time and price. Right now, we don't have time, nor do we have price. So there's nothing for us to do. We're waiting for 10:30, where we have time to see what price is saying. So nothing for us to do here. We still would be in this trade, by the way, all right? If we had more contracts, right, stop would be reduced to right here, and we still would be in here. I'm so proud of myself, boy. Well, I called myself out drawdown in this account here. Let's go. Let's keep it going, keep it flowing. Keep it going, keep it flowing onto the next account. Anyway, you need a plan for your account, risk management, a plan, and a trade management plan, okay? When it comes to a plan for your account, okay, these are the questions that you need to ask, all right? How are you going to approach the market, all right? What is the goal of this account? Is it going to be a ends meet account to meet your living expenses? Is it going to be an investment account? You're going to make the money that you make, is it going to be put into investments, okay? Like, what is the goal? What is the purpose of this account? What are your monthly and weekly targets, okay? We need targets. You need to set limits and boundaries on yourself, because if not, you're going to be in these markets 24/7, and you don't want to be in these markets 24/7, okay? You get your winning trade and be done. For me, I can be done right now for the morning session. I've got my winning trade for the morning session. I could be done. But this is my 9 to 5, so I'm here. All right, I don't need to be here, but this is what I do. This is my passion. This is what I love doing. All right, I'm trying not to obviously overdo it. Obviously, that's why I'm waiting for the right time. And obviously, if I see my setup, I'm executing, and that will be it for me. Okay, maybe two setups per session, and we're done. Right, 2 setups per session, and we're done. For me here, but obviously, depend on your time constraints and how much you can afford to be in front of the charts. Right. All you need is 20 minutes a day, really and truly, okay? 20 minutes a day, really and truly. We pick one macro that you can actually 100% focus your time on and just trade that. That's simply all you need, okay? So have monthly targets and weekly targets, okay? Monthly is the focus, but obviously pay attention to the weekly. The weekly targets will get you to the monthly goal, right? What asset class and market within the asset class will you be trading, okay? For us here, we're trading the futures asset class. The asset class that we trade is the futures market, okay? And within the futures, we trade NQ, MNQ, same thing, NASDAQ, all right? We trade NASDAQ futures. There's also, obviously, if you're a crypto fan, all right? Crypto would be the asset class, and within that asset class, obviously, you have Ethereum, you have Bitcoin. Those are the only two cryptocurrencies I know. All right, obviously, there's other ones that you can trade, but one asset class and one market within that asset class, right? If you're going to trade stocks, right, which is also an asset class, within the stocks, we have Google, we have Apple, we have all them big stocks that you can trade, okay? All right, so pick one asset class and one market within that asset class to trade, okay? What days and times will you trade? What will be your business hours? What will be your business hours? Like I just said, some of us, we have time constraints in terms of school and work. All right. So pick a time that you can actually give at least 90% of your attention to the charts to trade, right? It doesn't need to be, you don't need to be like me and trade AM session and PM session, right? You can just pick one session, right? One time within that session, one 20-minute interval, one macro within that time, and just trade that and be okay, right? There's nothing wrong with that, right? It depends on your time constraints and what you can afford to give to the market right now, okay? That's will encapsulate a trading plan. And when it comes to a risk management plan, okay, all right, this is the holy grail of trading. We'll talk more about this tomorrow, okay, when we talk about risk management. Your procedures and protocols when it comes to risk management should ensure that no single trade or series of trade can significantly impact your account. All right, capital preservation is key. Our number one job here is to preserve capital, protect capital at all costs, okay? We're not here to gamble and bet big and try to win big. That's not our goal here, all right? Our goal here is to take calculated risk-defined trades, right? Risk-defined trades, because our number one job is capital preservation, right? Especially if we're going to be managing other people's money, okay? If you're going to be managing other people's money, risk is imperative. Obviously, with your own capital, you can be as advanced as you want to be. But when it comes to managing other people's money, okay, they don't want to see their money being put to too much risk, okay? So capital preservation, especially within our fund here, okay, is our number one goal here, okay? That's our number one focus: preserve capital, okay? That's why right now I'm taking small risk-defined trades, right? Even though it's like a slow and steady approach, right? Slow and steady wins the race. I'm watching this continuation setup here. Not my setup though, all right? Because we don't have time for me. Not my setup. I'm not going to push it too much today, okay? I might not even trade PM session just because we have two-stage FOMC tomorrow, okay? And I've been burnt, trading before FOMC or the day before FOMC. It's always a bit iffy, because it gets a bit... We're taking open range session sell side, okay? So our session condition has been established as a sell program in line with our daily condition, okay? And both of these are going against our weekly condition, which is a buy program. So this continuation setup here, as you can see, did what it needed to do, even though it's not my setup, right? It's not my setup. So session condition has been established as a sell program, all right, in line with the daily condition, going against our weekly condition, right? It's always good to be aware of what the session, the daily, and the weekly are saying, okay? So we always want to be on the side of the higher time frame. But anyway, risk management blueprint, all right? You want to risk, if you have less than 2 years of experience of trading, this is also a continuation setup here. I'm watching it. We don't have time, so these are not my trades. These are not my setups. Because we don't have time. And if you don't have time, you don't go nothing. If you don't have time and price, specifically time, we ain't got jack shit. We just got a setup. Alright, watching this continuation. Still don't have time, but we're coming to a 1 minute inefficiency here. So this will be interesting. So like I was saying, if you have less than 2 years of experience in trading, okay, you want to risk no more than 2% of your equity. For me, less than 2 years, you don't want to risk any more than 1% of your equity anyway. Don't go any higher than 1% if you have less than 2 years of experience, okay? Below 1%, golden. But once obviously you collect more data and build more experience, you can go up to 2%, right? Work your way up to 2%. Right now, I'm at 0.25 of my account size, right? I have the experience to go up, but I'm still in the early stages of my consistency, right? I'm still in the early stages of my consistency. So once I start collecting more data and building more confidence, right, then I'll start to incrementally increase my risk. Right now, I'm at my lowest leverage. Okay, that's why I said slow and steady, right? Slow and steady wins the race. After a loss, no, I'm moving way ahead. Anyway, you want a model, right, that offers a 1 to 3 risk to reward ratio. Okay, if you have less than 2 years of experience, as you gain more experience, it doesn't, the risk to reward, right, doesn't really matter. But in the beginning, obviously, your win rate is not going to be that good. So you want a model that offers a 1 to 3 risk to reward ratio. So you only need to be right 25% of the time, and you can be wrong 75% of the time and still be profitable as long as you have a 1 to 3 risk to reward ratio. For me right now, risk to reward ratio is not a big factor in my trading. But like I said, if you're a new trader, inexperienced, less than 2 years, all right, it's a helpful tool to use, all right, because obviously your win rate ain't going to be that good. Watching this on the 1 minute. Waiting for 10:30 though. If I'm gonna do anything, I'm waiting for 10:30. Doesn't mean I can't watch what is happening right now, right? Doesn't mean I can't pay attention and collect data. Oh my god, I forgot I was doing something here. Also, after a loss, right? After a loss, you want to reduce your leverage, right? After maybe one loss, after two losses, after three losses, definitely you want to cut your leverage, okay? Because the only thing promised to us is that we're going to take a losing trade. We're going to take a series of losing trades. So it's always our job to prepare, right, for the losses that are to come, because those are the only thing promised to us, right? So after a loss, right, after a series of consecutive losses, you want to do something with your leverage. You don't want to go in again with the same leverage, okay? You're just fast tracking your way to blowing that account, okay? Same thing, after a series of winning trades, you also want to reduce your risk, right? You want to reduce your risk because our job here is to always be preparing for the loss, always be preparing for the series of loss that's coming, because we know it's coming is the only guarantee, right? So it's always in the forefront of our mind. We're always preparing for it, okay? Maximum 2 to 3 losses per day. Obviously, this will depend on your max risk per day, which you should have a max risk per day, per week, and per month. Okay, depending on your max risk, how much you're willing to lose for the day, okay, will decide, and your risk per trade will decide your maximum losses, right? For me right now, I'm at 0.25 per risk of account size, and we have a max of 0.75. Okay, that gives me what? 3 trades. That give me 3 losses. If I take 3 losses on a day, I'm done on that account for the day. Okay, so I have a maximum of 3 losses based on my risk per day and my risk per trade, right? Okay. Also, we want weekly and monthly targets, right? We want limits, set boundaries for yourself, or else you're just always going to be in the markets trading, right? I have a weekly target of 3%, which depending on the account size is different, right? For my 100Ks, I think it's 3K. And for the 50K, I believe it's 1500. I'm not sure. Don't quote me on that math. And also, you want to manage your pro trend trades and counter trend trades differently, right? If you have a retracement sub, okay, which is going against your current condition, right? How do you want to manage it differently in terms of your risk management? You want to take more off early on in that trade and leave, a little bit left just in case it runs, all right? Okay, and for pro trend trades, how do you want to manage that, right? Bear with me. Before I forget. And lastly, you want to plan for your trade management, okay? You want to plan for your trade management. right? How are you going to manage your trades, right? Are you going to manage pro trend trades and counter trend trades the same or differently? Right now, I'm currently managing them the same. All right, but I will be making an adjustment as I increase my risk moving forward. I will be making adjustments in terms of my pro trend trades and counter trend trades. I'm going to take more off at -1 on my counter trend trades, right, than I would with my pro trend trades, okay? Because I'm going for pro trend trades, you're trading with the program, right? With the conditions. So you tend to want to let the market breathe, let it run to your targets, okay? Counter trend trades are going against the program, okay? So obviously we understand we can get a reverse to reverse, retrace to reverse, but that's not always the case, right? Plan for worst case scenario, right? Are you going to partials or full pull? Take a full pull, right? What that means is, are you going to partial as price hits your targets, like what I do here? I partial depending on the contract size. If price allows me to partial, I will partial and adjust my stop loss, which is the next thing. Or you're going to do a full pull. It's either going to hit you for your take profit or it's going to hit you for your stop loss, right? That's what full pull means. You're not taking anything out. You have your take profit set and you have your stop loss set, and it's either take profit or it's going to be a stop loss. And stop loss adjustment, are you going to adjust your stop loss? Whether you're going to be a full pull or partial trader, right, in terms of your management, are you going to adjust your stop loss, right? I adjust my stop loss, right? For me, I use the fib tool to help aid and the bed. Is that a word? To aid me in my trade management. I use the fib tool to aid me in my trade management. Okay, so that's mainly what I use to like manage my stops, take partials, and all of that. Okay, and then let's get into what we're here for today. Nee, are you awake? Are you listening? I know that's a lot of information. And you get tired when you're doing something serious. I know how you get. Whenever it's time to do something serious, Nee will get tired real quick. Oh, you're getting bored? I'm boring you, eh? This guy, man, young generation. Not everything is TikTok mentality, okay? This is the hardest game out here, all right? It's gonna take time. You're not gonna get it in the TikTok with the TikTok mentality, okay? You better onboard yourself. What have you got so far from what I talked about? Let's make you on board then. Tell me what you've got so far from what we talked about. Loads, yeah, like what then? Type one thing. Type one thing then. Tell me one thing you've got from me running my trap. Because this is all for you. Oh, everyone takes losses? Okay, so for when it comes to the trading plan, what are the 3 things that you need to have a plan for? That we just talked about. We're waiting. We're not carrying on till you say. And if you don't know, say, I don't know. But name one of the things you need a plan for. You got everything by us. Oh, mate, this generation. Nee, get that TikTok mentality out of your head, all right? We're fighting titans every day that we're in the financial markets, all right? The central banks, they didn't create this for us to make money, okay? You're fighting titans and you need to be prepared. You need a mindset for it, okay? It's not a 30-second video is going to get you to where you need to get to, all right? These are the 3 things you need a plan. You need a plan for. Write them down. TikTok mentality. What that means is that your generation is being programmed, right? You're being programmed to think that everything is supposed to be, you're supposed to learn each and everything in a 30-second video. And if it's longer than a 30-second video, you lose interest. That's what it means, TikTok mentality. That's what your generation is being programmed to think and have the mentality of. Anything longer than 30 seconds or a minute, it loses your attention. Yes or no? Yes or no? Mr. I'm bored. No, it doesn't depend. If it's rubbish, it probably sustains your attention. TikTok mentality. You're gonna scrap that here today, all right? No more, none of that. All right? Did you get the 3 things down? These are the 3 things you need to have a plan for. Write them down. The question that you didn't have the answer to is on the screen, my guy. Oh, yeah. You ain't even paying attention to that, are you? My God. Oh, Lord help us. Help this generation that's coming up. Help them. I'm gonna whip you into shape, boy. I whoop your head, boy. You know I will. Did you get it? Yeah, all right. Hold on. Now, I would be interested in a retracement setup here. Okay, however, we could potentially be coming into a 1 minute inefficiency to continue lower. So I'm very weary when these 2 time frames conflict each other. And that's something that I'll be collecting data on. But obviously, I always want to go with the 1 minute time frame, because between the 15 seconds and the 1 minute is a higher time frame. Sure. Stop will need to be above here. So I'm watching this retracement, but paying attention to what's happening here on the 1 minute time frame. I'm not confident in it, so I'm not putting risk behind it. I'm just gonna watch it, all right? Nothing wrong with that. TikTok boy. Let's let this one play out. 3-step trading process, right? We have step 1, right? 2, and 3. Condition, stage, execution. This is what I'm doing every time I'm in front of the charts, right? After my daily processes, this is exactly what I'm doing. Step 1, I'm determining a directional bias. This is where you pay attention now, right? This is your focus for the week. Step 1, condition, yeah? This is where I need your full attention, TikTok guy. Step 1, condition, right? Determine directional bias. Let me know if you can see the thing, if I need to make it bigger so you can see exactly what I'm saying. Bigger. All right, bigger. Can you see? All right, so step 1, condition, all right? Determine a directional bias, all right? We have session condition, like we talk about. We have daily condition and we have a weekly condition, okay? These are the 3 types of conditions that you can have. For us here, okay, we go based on the daily and the session condition, right? But we're always aware of the weekly condition, right? We're always aware of it, but we trade based on the daily and the session condition, right? So in order to determine our directional bias, first we must identify our dealing range, all right? Okay, like I said, we go from 12 a.m. to current price action. For you is 2:15. No, it's not. It's 12 a.m. to 2:15. Yes, 12 a.m. to 2:15 for you in terms of your price. Okay, in terms of your time, right? You note the lowest low and note the highest high. All right, this will give you your dealing range. Okay, and then step 2, we wait for one side of the dealing range to get rated. All right, that will determine our condition depending on whether we're looking at the session, the daily, or the weekly. Okay, so for the session, it's 2:30 to 3 o'clock for New York AM session for you currently. I'll give you the other times after we're done here. Okay, I'll give you the other times after we're done here. So we know the lowest low, highest high. That will give us our dealing range, and we just wait for the market to tip its hand to us by waiting for one side of the dealing range to get taken, right? If we take the high of the dealing range, okay, we're in the buy program. If we take the low of the dealing range, we're in the sell program. You understand? Make sense? If we take the low of the dealing range, what program are we in? Let me know. TikToker. The trade here on the 15 seconds would be giving us -1, by the way. The one that I wanted to watch and not be a part of. Right? It would have given us 2 contracts and we'll be out already. Fair enough. Good to know. I can't remember the high pro. Okay, you said never mind. Yes, it will be a sell program. Yes. If we take the low, we'll be in a sell program. If we take the high, we'll be in a buy program. Okay. Oh, that was a. Ooh, this trade is proving itself really. Hold on. Let me make this thing smaller so we can see the setup here. Oh, you can already see it. You can see the beauty of the setup that I decided to let go. It would have done what it needed to do for me, all right? Because -2, I'll be out of it already. See what else it offers us. Cool setup. Cool setup. I'm happy that I didn't engage in it regardless, okay? Because this is something that I've seen multiple times. The majority of the time that I've seen it, it usually doesn't pan out in my favor. But good to know though. Beautiful setup here. Beautiful, beautiful setup. Retracement. Nice. So if dealing range high is taken, what's the program? TikToker? Buy program. Okay, good stuff. And what is the time for your daily dealing range? What's the time frame for your daily dealing range? From what time to what time do you identify your dealing range for the day? All right, 12 to 2:15. Good stuff. And for the session, specifically just AM session, New York AM session. Okay, all right, let me see you. You're paying attention. What about for the week? What about for the week? Too easy? All right, what about for the week? Let's see if you know that one. Yeah, the week is, yeah, we're waiting. Drum roll. I'm on the edge of my seat, mate. I'm on the edge of my seat. You're right. But what day? 12 a.m. to 12 a.m., but what day? What day of the week are we using the 12 a.m. to 12 a.m. for? You're half right. Okay, so it'll be Monday. Monday's range. So once Monday is complete, from right Monday 12 a.m. to Tuesday 12 a.m. right? Monday's range. Note the lowest low, highest high, and whichever side of that is taken will give you your weekly condition. So are you confident in step one? All right. Well, I'm gonna test. I'm gonna test you then. I'm gonna test you. Let's see if you know what you're talking about when it comes to step one. Because this whole week, that's your main focus. All right. Step one. So, question for you then, Mr. Smart Guy. This is based on the daily condition, right? The daily condition. So we take sell side, right? We take the low of the dealing range for the day. What program are we in? For the day, what program are we in? If we take the low of the dealing range. Easy question now. Easy question. This is the simplest step in a 3-step trading process. Step 2 is when it gets somewhat complicated. But step 1 is pretty straightforward. Yeah, we take the low of the dealing range. What program is that? What's our step 1 condition? What program? If we take the low, what program are we in? Okay, and what would have to happen for the program to change? You're correct. We've established that we're in a sell program for the day. What would have to happen in price for that program to change? Mister, this is easy stuff. If you don't know, say you don't know. Nothing wrong with that. We're not talking about zero sum game here, my guy. Good try though. Good try. I'll give you a B for effort. So for our program to change, right? If we took the low and we established we're in a sell program, price will have to come up and take the high of the dealing range, right? For our program to change. So we'll stick with being in a sell program until the high is taken. Make sure you have that in your notes. So if your condition is established, all right, you have to wait until price takes the other side, and that will change your program. You get that? So let's say we established a condition already here that you answered, the sell program, right? If price takes the other side, the high, okay, then this will change the program from sells to buy. The question was, what would have to happen for the program to change? And the answer is price would need to take the other side. Depending on which side we're already taking, we'll need to go and take the other side of the dealing range. So if sell side, the low is taken, it will need to go and take the high to change the program. If buy side is taken initially, it will need to take the low, right, to change the program. Let me know if that makes sense to you, or if you need me to explain it in another way. Let me know if it makes sense to you. If you have that written down, let me know if it makes sense. Okay, so if if our condition has been established already, right? If our condition has been established already, we stick with that condition, we stick with that program until the other side of the dealing range is taken. So like the example that we're talking about right now, the question I asked, if the low is taken, what condition are we in? We're in a sell program. We stay in a sell program until the high of the dealing range is taken. For the other side, if we established initially that our condition for the day is a buy program because we took a dealing range high, we stay in a buy program until the low is taken. At that point, our bias will flip from a buy to a sell. Okay, so now answer me this. What would need to happen for our condition to change? Let's say we've established that we're in a sell program for the day. What would need to happen for our condition for that day to change? Put the answer when you're ready. The people are on the edge of their seat waiting. Clap for Glennie. And another one. And a bigger one. All right, good. Good. Good, good, good. I'm going to be quizzing you throughout the day, all right? Throughout the week, I'm going to be quizzing you on step 1, all right? So be ready, study up. This is the easiest step, all right? This is the easiest step. Once you have this, it doesn't get easier. Step 2 is a bit complicated, but this is the first step and it's easy, all right? So before you take any trade, right? Before you take any trade, you need to know your condition, right? Before you think about even entering the market, right? Or what type of trade you're going to take, right? You need to establish a condition first, right? And we do that in 2 ways. First, we identify a dealing range, all right? And we wait for one side of the dealing range to get taken. So what are the 2 ways to determine your directional bias? This is a question for you, by the way. What are the 2 ways to determine your directional bias condition? hit our sell side draw on liquidity. Gives me this here, I would be interested. That's the second, that's one of the, that's the second thing you wait for, but what's the first thing? That's the second step in determining your condition. That's the second step. No, you have to identify your dealing range. So first you identify your dealing range, and then you wait for one side of that to get taken. Yeah? So in order to determine your directional bias, your step one condition, first you identify your dealing range. That's the first thing that you do, identify your dealing range. And then the second thing is you wait for one side of that to get taken. So you got the second part right, but the first part is identify your dealing range. Make sure you have that in your notes. Oh, I like this for a sell here. Oh, did it? Oh, okay. Oh, what's happening? It's missing me with it. It's missing me with it. Ah, we have a lower market structure shift too, so if it's gone, it's gone. It's okay. It's gone without me. We have this too. This would have been a good entry. You got that? So what's the first step again? Good. Good stuff. Good stuff. One contract, Larry. Any more than 350. Okay, it's under. Yeah, I won't be interested now. I need a V shape. I need some Vim. How long is the session? So for the New York AM, which, sorry, excuse me, the one we're trading right now is from 9:30 to 11:30. I'll be getting out of here in 9 minutes. I'm usually done with my trading by 11:30. Let me see what the time is will be for you. It's about 2 hours. The session is about 2 hours. So from 2:30 to 4:10, I'm usually done. Your time, 2:30 to 4:10. I'm gonna wrap up here. Okay? We don't have long left here. Mr. I'm bored. Oh, mate. TikTok guy. The 2 hours is too long for you, yeah? I'm busy doing what? Busy doing what, mate? Yo, you're funny, you know. What are you busy doing? And talking to girls, and that keeps you busy, yeah? Let me ask you this: would you rather talk to girls, or would you rather learn how to make money? Hmm? Answer me that. All right, exactly, and that's exactly what you're learning here. Once you have the money, right? They're gonna flock to you even more than they are now. All right. Mind on your money. Get your mind right first, yeah? Get your money right first, yeah? All right. Don't worry about them right now. You can do that after you're done, actually. That doesn't stop, right? My guy said busy talking to girls. I should slap you for that. Ding. All right. We're going to do a trade performance review. All right. We're going to do a trade performance review. In that trade performance review, we answered 3 questions. All right. First is what I did well today. For me, I showed up. All right. I got 1% better. Gained experience, learned lessons that I'll take into my next trading day, next trading session. All right. Showed up today and followed my procedures, my protocols, and my processes, and didn't deviate from me. All right. So very happy and pleased with my performance today. Okay. Next question is, where did I fall short today? Falling short today would be my wake up time and not getting my morning routine. Like I said, my sleep was interrupted with the fire alarm, and it was hard to get back to sleep. And once I got back into deep sleep, all right, then obviously a couple hours later I had to wake up, so it just made me tired. Okay, so I didn't really wake up until it was about 9 o'clock to come here, really and truly. So where I fell short today will be my wake up time and not getting my morning routine in. Okay. Next question is, how can we improve for the next day, next trading session? Okay. How can improve for next day, next trading session is keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me, distract me from what I got going on here. I got a solid foundation in terms of what I'm looking for in price. And I just have to stick to it, keep following the process, keep following the position protocols, and let time, all right, and experience do its thing, right? Also, keep taking small steps in the right direction, okay, and eventually we'll get to our destination. Yeah, keep analyzing the data, right? Because that's what's proven to get me to the next level, okay? So, other than that, solid day from us here at the Trader Capital. Took 1 trade, but I'm content with it. I won't be taking any more trades going into lunch, going into PM session. I'm gonna wait till tomorrow, okay? Because obviously we have FOMC, and We have two-stage FOMC, and I've been burned trading before that so learning my lessons, right, and not trying to repeat the same mistakes that I make. But other than that, good stuff from us here. This continuation setup was solid, all right, even though we didn't have time, it was solid, did its thing, but not my trade, right, not my setup. That'll be it from us today, all right. Nee, I hope you took a lot out of today, all right. I hope you got what you needed to get out of today, all right. Remember, your main focus this week is condition, all right, and I'll be quizzing you throughout the week, okay. Let's wrap up. Before we wrap up, I want to leave you with this. There was a time that I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all three pillars: the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading, happy bloody hunting. Remember, you only fail when you quit.